we'll be recording this so you can see it later on. But yeah, this is the third of our spring series that we've been doing, bringing in industry experts to talk to our clients about the things that they're experts in. And so we've got Susan today, who is a disability insurance expert. I'm sure expert in other things, but the thing that we're asking to talk about today is disability insurance. So without further ado, Susan.
Great. Thank you. I appreciate it. And thank you everyone for being here. Hopefully you are seeing my screen. I just shared my screen up at the top. What we're going to talk about today is kind of some things about disability or the chance of disability that you may not have realized, the importance of having some type of backup plan if something should happen that you're too sick or you're injured and you can't work. And we'll go over some things like what's important to have in a disability insurance policy as well. So, but please, if you all want to come off mute and stop me and ask questions along the way, there's, a few of you, interaction is perfectly fine with me. If not, I'm just going to go through and then I can take some questions at the end as well. So let me get my shifting. So like I said, we're going to talk about the risk of disability, the impact it has on your life, some of the alternatives and slash quote unquote objections to disability insurance, as well as Social Security and what it typically provides. And then we're going to talk about the individual and some business products as well on the disability side. So these are just statistics. I'm not a huge statistic person, but I put these up here just for a second so that you understand that, basically you have a 1 in 4 chance of becoming disabled. And when I say disabled, I mean for more than 90 days, a true long-term disability that could severely impact your lifestyle. Most people think that accidents are the main culprit of a disability, but actually about 90% of disabilities are caused by things like cancer, heart disease. And when it says back injuries, it's more like degenerative back diseases and things that we're talking about there. These are some of just the top reasons for disability. And I point out every time, for long-term claims, musculoskeletal disorders in the dental world, the positions that you're taking and you're working in all of the time can definitely take a toll on your back or on your musculoskeletal system, your knees, you're standing a lot, you're using your hands and things like that. That is actually the #1 reason for disability. So that's something that you definitely want to take into consideration. Obviously, cancer is one of those. Injuries and fractures, about 12%. Of disability. So everything else is really, and mental health issues. I put this one up there because mental health issues is almost 10% versus heart attack and stroke, which I think most of us can imagine being disabled if we had a heart attack or stroke. Mental health, it actually affects more people than even heart attack and stroke when it comes to a disability. So just some thoughts of things that can happen that you may not have considered before. Everybody always thinks about the car accident and things like that, but there's so much more and so many reasons. I used to have this guide that was like the 5,000 plus reasons you could become disabled, right? And it went through, and that was just what was in that book. So the reason that we talk about a disability is because obviously you all have done a lot of training. You may just be coming out of your training. You may have been out of training for years and have built your own practice or have worked really hard for what you earn. And that obviously is kind of the foundation of your financial welfare. It provides for your family, it provides for you, not only just to pay the normal bills, but also for your retirement and things like that. So there's a huge impact. If you become disabled and can't work and are no longer earning an income, not only does it obviously physically impact you and financially impact you, but the family, if you own a business, if you have any type of loans or anything like that, the disability affects everyone around you. So, we call it the living death, meaning if something happened, we all know life insurance provides, if you die, it gives your beneficiaries, your family, or whoever you leave that money to, some financial security. Well, during a disability, there's one additional person that you have to take care of because you're still here. So disability can actually be a larger financial impact than even a death is. And you actually have, you're 3 times more likely during your working years to become disabled than you are to die. So disability insurance, or at least planning for a disability, an interruption in your ability to earn an income, is really important, not only for you, but your family. I'm going to tell a quick story. My husband, I've actually um, been on the other side of a disability. My husband was disabled for a little over a year and a half. And I own my own business working in the disability world. And I became the primary caregiver for him. Um, and so that impacted my business as well. After he recovered, I actually got sick for about 2.5 months because I had run myself down taking care of him for so long that finally, when I got that breath, when he went back to work and I thought I could breathe again, unfortunately, it took a toll even on me physically. So when you think about it, you're not only protecting your income, you're protecting your family, your business, and even the banks, if you have any loans or things like that, because that's not something that any of us want to worry about. When you're sick or you're injured, the last thing you want to worry about is phone calls from debtors. How are you going to pay your bills? How is your family going to continue in the lifestyle that they were used to? So let's talk about some alternatives to insurance that a lot of people bring up. And this is something that I'm going to go through real quick. If you think about it, your savings, you may be thinking, hey, I'm a really good saver. I save a large portion of my paycheck, which is fantastic. Yes, absolutely. Most financial planners used to tell everyone that you would want at least 6 months of your normal expenses, including your bills and normal living expenses, in savings. Now it's actually more like 12 months. But how long would 12 months last? If you are disabled and potentially have higher bills when you're disabled than when you are able to work. And that's because if you think about it, your bills go up, your deductibles. You're suddenly paying your medical deductibles. Depending on your insurance, you may have co-payments, certain medicines and prescriptions that you didn't have to pay for before. In my husband's case, we had to pay for this contraption, I'll call it, on his leg. And it wasn't covered under our insurance. So we were out of pocket for that. We had to pay for every time he went in and had a surgery. There was a bill for the anesthesiologist and a bill for the outpatient surgical center, a bill for the surgery or the surgeon himself, et cetera. So it's amazing. You think, hey, if something happened, I would cut back. But what happens is even if you cut back on some things, something else will replace it. You will end up with another bill in there along the way. And your 401k or your retirement savings is not a great place, right? That's for later down the road, the future. That's not for now. So if you have to dip into that because we didn't have the planning that we needed, the then you know you won't have that for the future. So not a great alternative. Savings, if you have 12 months, great, but the average disability lasts somewhere between 2.5 and 3 years. So after that first year that you've gone through your savings, what are you going to do? Second, household income. I talked about myself in that, I run my own businesses, but I was taking my husband to PT and to doctors and to surgery and trying to help him because he was not able to walk. So I was doing everything for him. So my business suffered, my income suffered as well. Not to mention, most families who have two incomes, they need both of those incomes to really be able to pay all of the bills that they have. Credit cards, or I'm sorry, family and friends, really, how long are they going to want to bring you in? Friends, especially your family. I'm sure you love your family, but they probably don't want to live with you again. So that's one of those things that you think, well, I could probably move in, if you're young enough, mom and dad, or if you're a little bit older and you have grown children. Neither one of that is a great solution. Credit cards, again, such high interest rates. How are you going to pay back the debt without an income, right? And those interest rates are just going to keep, racking up on top of each other. Cutting back on expenses, I touched on this a minute ago, but really, I hear people say, well, I would cut back. I don't need all the cable channels. I don't need all of my streaming services. I could maybe get a slower internet. And sure, you could, but is that going to make a significant difference in being able to pay all of your bills if you have no income? Not really. You still have to pay your mortgage or your rent to have a place to live. You still need to put food on your table, clothing, provide for, if you have a family, your spouse and or your children. Social Security, we're going to talk a little bit more about this later because that is something that does sometimes pay, but we're going to talk about how that works in a minute. And then if your sickness or injury prevents you from working for years, again, the average is 2.5 to 3 years. I know I'm never average. Murphy's Law always gets me. I'm definitely going to be that one. That's going to be the 20-year disability, okay, if something happens to me. So how would you get by? You want to have a plan that is going to replace your income with a monthly benefit that you can use just as you use your paycheck. And we're going to talk about that. So Social Security, let's talk a little bit about Social Security real fast, because this is something that people hear a lot of and think, okay, well, I'll get something from Social Security disability. They do have a pot for disabled people, but their definition in order to qualify for anything from Social Security is you must not be able to engage in any substantial gainful activity because of a medically determined physical or mental disability that is either expected to result in death or has lasted or is expected to last for at least 12 months. Okay. That's a really long disability. And let's face it, expect it to last for 12 months is kind of subjective. If you've already been disabled for 12 months, you've met that definition. But again, you must not be able to engage in any substantial gainful activity. Okay, meaning you can't be a greeter at Walmart. You can't do any of those very kind of base entry level jobs, even. And you all have not gone through all the training to do a job like that. You've gone through all of your training in your dental careers so that you can work and maintain a higher standard of living than um, something like an entry level position. But Social Security, if they deem you able to do something like that, they say, we're so sorry. You're not considered disabled under our definition. We don't owe you anything. Just again, statistics, 32% of Social Security claimants get their applications approved. That's about a third of them. 21% at the initial application stage, and then there's an appeals process if you don't get your application approved. But that can take at least 3 to 5 months to get the initial decision. And then over 9 months, I've heard it's actually over a year before the appeals start happening. So you could be waiting a year and a half before your appeals go through and everything else to find out if you're even going to receive anything from Social Security. And if you do, the average is just about, I think it's a little higher now, this is a little bit of an older statistic, about $1,300 a month. Most of us have much higher bills and needs than $1,300 a month. Even if we have a second income in the family, $1,300 a month is nowhere near replacing what we're used to bringing home after taxes. So it's actually below the poverty line that Social Security is paying out on an average disability. So if you're thinking Social Security, yes, there's a possibility you could get something from them. Is it going to be something that you can live the rest of your life on? Most likely not. So let's talk about the real solution, which is an individual disability insurance policy. And there's a couple things we're going to go through: renewability, the waiting period, how long it pays, and then some just optional riders that you want to think about or you may want to make sure are on your policy. So renewability, there are two different things. What it means is, how long do you get to keep your policy? When is it renewed? Guaranteed renewable and non-cancelable means that the insurance company, so long as you pay your premiums, cannot change or cancel your coverage in any way. And that's really important to have both a guaranteed renewable and non-cancelable policy, because if it's guaranteed renewable only, it means as long as you pay your premiums, they can't cancel it on you. But they could change it. They could say, you know what, we've had a bad run with a lot of claims in the dental world, so all dentists' rates are going to go up 10% next year, 20%, 40% next year. They could say, depending on what state you're in, Maryland, Virginia, wherever you're located, they could say, you know what, everybody in Maryland is going to get a rate increase next year. Okay. If it's non-cancelable as well, it means those premiums are locked in. So you want both on your contract. So you know in the future what you're going to be paying. You don't have to worry about that going up or what the insurance company decides to do. Elimination period. This is a waiting period. If you think about your car insurance, you have a deductible. In your car insurance, you may have a $500 deductible, which means if there's an accident that occurs that your insurance is going to cover, you're responsible for the first $500 of it. And after that, they will pay for the rest of the claim. With disability insurance, that deductible is called an elimination period, and it's time. How long do you have to be disabled before the policy starts paying you benefits? And on a long-term disability policy, the standard is about 90 days. And again, hopefully we have that savings to keep us going, pay our own bills. So the bills are on us for 90 days. And if you're disabled, that 91st day, technically the insurance owes you 1 day of disability. Now they wait until the end of each month to pay out because if you recover 10 days later, they only owe you 10 days. They don't owe you the entire month. But if you don't recover, they give you the entire month of benefit. Benefit periods. This is something that typically most people buy to age 65 because of retirement, right? If something happens and you're totally disabled and you never get to go back to work, you want that policy to pay out until hopefully your retirement plans and then your actual Social Security retirement kicks in and things like that. So, but we have longer benefit periods now because if you've noticed, the age of Social Security of when you can collect is going up. So you can actually buy to age 67 on your disability policy, which means the benefit would pay until age 65, so long as you remain disabled, or to 65, 67, or to age 70 even. We can go all the way out. And it also depends on what your planning is of when you think you are going to want to retire, and things like that. But, we try to get the longest benefit period, at least to age 65 as we can, from the insurance companies, because again, Murphy's Law, you might be that 20-year long disability, not the 2.5 year average disability. Definitions. I'm not going to go through all of these. Just in the dental world, you want to make sure that you are covered as a dentist. And if you're a specialist, a periodontist, an endodontist, or any of the other specialties, you want to make sure that your disability contract says that it will acknowledge your specialty as your occupation. The reason why, and that's what we call a true own occupation definition of total disability. It basically says if you're unable to perform the material and substantial duties of a dentist or a specialist in the dental field, we deem you totally disabled. That means if you could still teach at a dental school, if you could still consult with a dental practice and earn an income, it's not going to offset your disability benefit. And that's really important. Again, you all have trained to go into the dental field for a reason, and you should be able to buy a policy that covers you and protects you for that specific training, no matter what else. I will tell you, if you become disabled, most people joke like, oh, if I didn't have to work, I wouldn't, right? Not true. Most of us who have been through training, been through a long education, um, we get bored very quickly. When my husband was disabled, I think it took him about 3 weeks and he was losing his mind. Unfortunately, he was not ambulatory. He couldn't go anywhere, so he couldn't really do much. But, and thankfully we knew he was ultimately going to recover. It was just going to take a while. Um, but if you're sitting around, even if you can't go anywhere with the internet these days, you might be able to sell things on the internet or create a whole new business for yourself without having to worry what's going to happen to my disability payment. You're going to still receive it because you're not in the occupation you were in when that disability occurred. So there's a bunch of built-in things that I'm going to go through kind of quickly here. In an individual contract, most contracts out there have a waiver of premium. It means while you're disabled, you're not paying the insurance company. They're going to waive it. Waiver of elimination period, meaning what happens if you satisfy that deductible, that 90 days, and you go on claim, and the insurance company's paying you for a while, and you recover. But then you become disabled again, either from the same cause, a related cause, or maybe even a different cause. Most companies, if it's the same or related cause within 12 months, you go back out, you had a back injury, you're out for 6 months, the insurance paid you for 3 months because you had that 90-day deductible in the beginning. And your doctor says, you know what, let's go back to work and see what happens. And you go back to work, and a few weeks later, you twist the wrong way, and there you are, problems again, can't stand, whatever it may be with your back. When you go back out, you don't have to resatisfy. As long as it's within that specified period of time, go through 90 days of no payments again. That will allow you to get first day benefits. Presumptive is, when does the company just assume you're disabled? Like, how, when a disability is bad enough, when are they going to just say, never mind your deductible? We're going to pay you day one. And most of the time it means that, if you became blind, if you couldn't talk, if you couldn't hear, so you'll lose your sight, your hearing, or your speech, or you lose the use of at least two or more of your either hands or your legs, your arms or your legs, feet or hands. If you can't use two of those, you're clearly disabled, especially in the dental practices. So we're going to presume you're disabled and waive that elimination period. There's other things that are built into contracts, such as workplace modifications to try to get you back in, rehab, occupational rehab, things like that. And then there's some that pay you a little bit more for certain illnesses, serious illnesses, mainly the big three: heart attack, cancer, and stroke. If there are contracts out there that say if you become disabled from a heart attack, cancer, or stroke, they're going to pay you 50% more of your monthly benefit for the first year, because a lot of times you do need the rehab. You do need to maybe modify your home. You may be having to pay for higher medical bills and things like that. So it's kind of just an extra bump to help you. Optional riders, these are really important. These are, again, they're optional. They're your choice. But the first one, partial. I will never, ever, ever let someone buy a disability policy without a partial benefit on it. This means where you may still be able to work, but only part-time. Right? So if you can only work part-time, you can imagine your income's going to decrease because of that. If you work for someone, obviously, if you're not working, let's call it the standard 40 hours a week, and you're only working 20 hours a week, that's half time. They're probably only going to pay you half your paycheck. If you own your own business and you can only work 2 or 3 days a week, you can't see as many patients. Your patients are going to, instead of unfortunately waiting for you while they may love you, they're going to possibly find another dentist that is easier to get in with and faster to get in with. So your income will ultimately suffer. So a partial disability meant, most of the time, 80% of disability claims, people who are disabled, 80% of the time need their partial disability. In other words, let's say it is, actually, I'll use, there was a dental claimant, actually it was one of our K-Tung's claims a long time ago. She was a dentist, she was a general dentist, owned her own practice. She found out she was diagnosed with breast cancer. And at first, she was having chemo once a week, let's call it Monday, but she was having, it was a once a week plan for chemo and so Monday she was out, and Tuesday she did not feel well enough to get back into the office. But because she owned her own practice, she still worked Wednesday, Thursday, Friday. But as you can imagine, again, she's only there half the time. Her patients were finding other dentists that they could get in easier with. And slowly but surely, her income was reducing because of that. And what will happen with the disability plan is we will give you part of your benefit based on what income you're losing. So if you lose 50% of your income, we're going to pay you 50% of the benefit to try to help make you whole again. Inflation protection. This is something we all know about inflation right now. A few years ago, when we were at 0%, it was a different story. But
Mm.
everyone understands the impact of inflation and what it can do. Let's just look at the price of eggs right now, right? Um, Inflation protection is important. It is optional on your policy, but what you want to look for is, there's simple inflation and there's compound inflation protection. Simple inflation, it's just like interest in your bank account. If it's simple interest, it's just on the benefit amount itself, not on the increases, versus compound will grow a lot faster because we're also going to give you that inflation protection on any of the increases. So it's really important. And also, is the inflation protection guaranteed, meaning a 3%? You're going to get, while you're disabled, your benefit is going to guaranteed grow 3% every single year to keep up with inflation. Versus, is it tied to what we call the consumer price index? The consumer price index every year comes out and says inflation this year was whatever percentage. And then you get that instead. So if inflation is down, let's say inflation goes back down, hopefully it does, to 1%, or back when we were in a 0% inflation world, if you were disabled, you weren't, because it was tied to what inflation actually was that year, you wouldn't receive any raises on your disability insurance. Can you imagine if you were disabled for 20 years living on the same income with no raises? That's basically, without an inflation protection, you're not giving yourself any raises. And I know, thinking 20 years ago, that money wouldn't buy hardly anything nowadays. I know, just going to the grocery store, you walk out with 4 bags and it's $200, right? So inflation protection, we can feel it now, and it's really important. Increase options. There's lots of ways. You do have to medically qualify for your individual disability plan. But if you put an increase option on your plan, this will allow you to not have to medically qualify in the future. Just show that your income has increased, that you need more coverage. And this will allow you to buy that coverage without worrying it, because unfortunately, as we get older, we tend to see more medical issues. So this locks in right now your health so that you don't have to worry about it later down the road if something should change. There are things like catastrophic disability, which means that if you can't perform what we call the activities of daily living, two or more of those, or it's a cognitive impairment, meaning a brain injury or an early onset dementia type thing. The activities of daily living are being able to feed yourself, bathe yourself, walk, transfer yourself. There's 6 of them. Toileting and bathing. So if you can't do 2 or more of those things and you need help with those, the insurance companies, if you add on a catastrophic, will give you additional monthly benefits above what your normal benefit would be. And then we can also protect things like your retirement contributions, or if you are just recently a new graduate from school and you have loans or anything like that, we can actually put additional benefit onto the policy under one of these options, so that if you become disabled, those are still getting paid too, and you're not using money from your normal bucket that you want to pay your rent or your mortgage and your electricity and your grocery bills. You still have all of that. This is in addition to it, and you can use that to pay off those loans and not have to worry about your debtors. The last thing I want to talk about, and because we talked about individual disability insurance and the different options, it's really important, obviously, first and foremost, to protect your own income. But many of you are or may become a business owner, and you work really hard. And a lot of times, many times, the banks will require you to have, if you're buying an existing practice or you're getting a loan from a bank to build your practice out, business overhead expense is something that we can offer to you to help. Number one, if you become disabled, if you can imagine owning your practice and you're the main dentist, maybe you have 1 or 2 working for you, but you're really the reason why your patients are coming in to see you, and you become disabled, you would need to replace yourself, right? You need to bring in a dentist. If you're a sole practitioner, definitely you need to bring somebody else in to keep your patients coming in the door. You need to pay your staff salaries. You need to pay the rent, the electricity. It's kind of like, keeping your life going on at home, your personal life. This is your business life. This is keeping this going on. And so it covers your normal fixed business expenses. It does not cover your income, because that's why we buy individual disability insurance. But it can pay either for 1 year, 18 months, or 2 years. And that's basically, it's buying you time. You may have heard of it referred to as business interruption insurance. It's buying you time to bring somebody else in. Hopefully, maybe they'll want to buy the practice from you if you're not going to come back. Or hopefully, it's giving you enough time to recover and get back to your own practice and rebuild your business. You can get partial disability on that because, again, if you're not seeing as many patients and you're only working part-time, you don't have as much revenue coming in the door to pay all of the normal fixed business expenses that don't change whether you're working full-time or part-time anymore. So it will, and it reimburses you for that reduction in revenue. The other thing that business overhead has is what we have, what we call business loan protection. And I was talking about how if you buy a practice or you're getting a loan for opening up a new practice, a lot of banks are requiring now because they're realizing they used to always require life insurance. If you died, they want to get paid. Okay. Now they're realizing, oh, wait, that threat of disability is 3 times bigger than what we were worried about. So now they're starting to require, in order for your loan to be approved, a disability policy. And what we can do is instead of using your money that you should be paying your own personal mortgage with and all of that to pay off a loan to a bank, and instead of using your regular overhead policy to pay for a loan, you want to use that to pay for your rent and keep your practice open. So hopefully you get back to it or you have something to sell if you need to. This is an optional rider we put on it that matches the terms of the loan and the payment of the loan so that when you become disabled, that goes straight to the bank and is going to cover that loan. And the banks really are looking for full coverage. Obviously, if you become disabled and you're not bringing in revenue, how are you going to pay them back? And many times I see this all the time with dentists. Those loans can be a couple $1,000,000, right? And you may be paying that back for the next 20 years. That's a very large loan and a very long time to pay back. That if anything happens during that time period, that bank wants to make sure they're paid. So even if the bank isn't requiring the coverage, it's a really good idea to do that because nobody wants to put themselves into bankruptcy or have to worry about the debtors coming after them and any of their assets, especially if you're disabled and you don't have a regular income coming in. So that's the thing. Now with individual disability insurance, what we talked about before, you pay that with your own money, your own personal funds that you've already paid taxes on the money that you're paying with. So that benefit comes to you tax-free because you've already paid taxes on the money you paid the premium with. With overhead insurance, it's kind of a unique product. Your business can pay for it. It can deduct the premium as a business expense, which is fantastic. But because we're sending you money that you're using for your expenses that you're then writing off on your tax returns, you're not paying the taxes on the premium or the benefit. So it's a very unique product in the fact that it has a tax advantage to it as well. There is a tax savings there that you can write it off as a business expense as well. And I know if you're a business owner, you are looking probably for as many business expenses as you can to keep that tax liability as low as possible. And this is one way to protect yourself and use business funds tax-free to do that. So I want to open it up to any questions. I know we have about 15 minutes left. I'm more than glad to stay on. And thank you for everyone who joined. Does anybody have any questions? If you want to come off mute or type in the chat, I'd be more than glad to answer anything.
Yeah, thank you, Susan. That was good. I was nice for me to learn also too more since I'm still, I guess, fairly new. So is the for the riders, is the COLA rider different? The cost of living rider, was that in there? Did I miss that? Or is that something that's different?
Yep, it's inflation protection. Yeah. We
Oh,
in
okay.
the industry we call it COLA, which is cost of living adjustment. We have insurance agents have a lot of acronyms that we use. So but so that yes, the COLA is the inflation protection.
Okay.
What other questions does anyone have?
I have a question. Or my question was,
Sure.
I think there was a slide at the start that mentioned where you were talking about the most likely short-term and long-term disability.
Sure. Here it is.
With um, I think he was talking about, yeah, the mental health issues. Would that
Mhm.
be like I guess the severity with which it covers, are we talking like Alzheimer's where you kind of like are almost, debilitated, or is it down to like an anxiety disorder
Yes.
or,
All of the
obsessive
above.
compulsive
It could be
disorder?
all of the above. The way a disability contract works is um, it looks at based on whatever injury or illness, whether it's anxiety, depression, um, or anything like that. Are you able to do your job?
Mm.
Um, and obviously, the insurance company is going to pull medical records and things like that to see is the doctor saying no, right? And depression and anxiety are definitely things that are, that happen a lot of times. That I always say, do are you going to wake up one day and just lose it? Probably not. But a lot of times what happens is outside things happen. If you can imagine, the death of a spouse, the death of any loved one, a parent, a child, whatever, that could be disabling. It could be a depression to the point that you just can't get up and do it every day. At least maybe not for a while, until some therapy or whatever, and then hopefully you do get back to work and get past it, or have dealt with it enough to be able to go back to work. But yes, the mental health issues can be anything from that to, actually there was an insurance agent that I work with who did actually kind of, he was spiraling and didn't realize it. He had been undiagnosed, but he was bipolar his entire life, and he
Mm.
didn't know it until he was in his 40s when
Wow.
he did kind of have that break and ended up hospitalized. So
Wow.
it does happen that way, but a lot of times it's something else that happened on the outside. Anxiety. I myself have suffered from panic attacks. My husband was out of work for a while, and there was a lot of pressure. And
Right.
I started, suffering from panic attacks. And I can absolutely see how someone with anxiety very much could not function because I was starting to worry about myself. Thankfully, I was able to work through it and everything. And it was years ago, but mental health issues really, a lot of people kind of don't think about those. Now um, in the disability world, typically those aren't covered for the full benefit period. A lot of times they are limited to a 2 year, but it's per instance. So it's per claim. It's not necessarily you get 2 years and you're done. But yeah, mental health issues, that's one of those things that most people don't think of when they think of disability, but it is a very large part of them. What else? Anybody else have any questions? If you all are interested in looking at any of these solutions, if you don't have an individual disability plan, I highly suggest talking with Sarah about that. We'll get you some quotes so that you can take a look at pricing and stuff, just to give you an idea of pricing. And this is rough estimate. Um, Females do pay more than males on disability insurance, but we pay less for life insurance. I jokingly always say we go to the doctor earlier so we become disabled and don't die. Men, you all can be a little bit stubborn and don't want to go to the doctor until it's a little too late, so you have to pay more on your life insurance. So it ends up evening out if you're looking at protecting both. Females will pay less when their life insurance, but a little bit more on their disability insurance. Typically, your premium is going to cost you somewhere between 2 and 6% of your income. Males are going to be on the 2 to 3, maybe 4%. Females will be on the 4, 5, 6%. It does depend obviously on your health. It depends on your age, and then how much you are eligible for based on your income. If you're a business owner, we do look at your income after you deduct all of your business expenses. So what you're telling the IRS is your earned income that you have to pay income taxes on. That's what we're going to consider as your income for purposes. But again, because you're paying for this with your already taxed dollars, the benefit is going to be tax free. So really, typically, we cover somewhere between 60 and 80% of your normal bring home pay. So yes, you'll have to make a few adjustments and things like that. Obviously, disability insurance is not there to keep your second vacation home for you, but it is there to make sure that your standard of living can stay where it's at. You don't have to uproot your family and downsize everything, and things like that. So if we made everybody whole, I'm pretty sure everybody would be disabled. So, there are some cutback there, and obviously it's not going to be 100%, but it is going to be your best option. My husband, when he was disabled, if you're wondering, yes, he did have disability insurance, which was why financially, thank God, I did not have to worry. And I really, truly understood when that happened, which was 8 years ago. I had been doing that I've been doing this for 18 years, talking about how important it was. And when that struck, I thought, wow, I am, thankfully not eating my own words. My husband was fully covered, and we didn't skip a beat financially, which allowed me to mentally and emotionally handle helping him get back over that long term. So, it definitely, and for him, he didn't, it didn't hit his ego, right? Because I mean, for all of us, what we do for a living, it's a huge part of our identity and who we are. So it's really important when you can no longer earn that living and you're used to either being completely independent or a team in a family. When you can no longer contribute, sometimes that emotionally can really get to you. Um, but if you plan properly, you don't have those feelings of guilt or anything like that, or worry anymore. So, the planning is the important thing. The sooner you buy, the better, because the younger you are, obviously, the less the premium. Typically, the younger you are, the healthier you are as well. So getting through that medical requirements and everything is a little bit easier too. Now, it's not a yes or no situation in underwriting. It's not, oh, you have something, wrong, or a medical history here, we can't write you. There are ways where we can exclude the area. Let's say you've already had a problem with your lower back in the past. We may say we will give you coverage for everything else but your lower back, because that's a pre-existing condition. Um, or let's say you have, I don't know, cholesterol that's not controlled, or high blood pressure or something like that. We may charge you a little bit more premium for something like that we can't exclude. There's no way to exclude blood pressure, right? Because it affects our entire system and all of our bodies. So those are things that we can do, where we can do a modified policy offer instead of just outright declining you for the coverage. And sometimes if we get that blood pressure under control later down the road and show it's been under control for a while, we can bring the premium back down to the normal level. Or if the lower back doesn't cause a problem for a few years, we can have it reviewed to show, I haven't had any more problems. I just tweaked a muscle back then. And we can get that exclusion removed at certain times. Now, things like arthritis that typically don't go away or get better, those are going to be permanent exclusions. But things that do get better in the long run, we can definitely review in the future too. So, if things do look better down the road, we're always willing to review things for everyone. But, hopefully you're young and you're healthy and you're thinking about buying disability insurance at the right time, so that we can get everything locked in for you and you don't have to worry about it again. And we'll put some of those increase options on your policy so that you never have to worry about medically qualifying.
That's great. I
Any
know
other
for,
questions?
sorry, I was just going to say, for me, you've already changed my kind of definition of disability. In my mind, it was something that lasted, or it was kind of like, once you got it, you got it, and then it's there forever. So knowing that, like, the average disability is, I think you said 2 years, right? That was
Yes.
like, that's already changed how I
Yeah.
think about things pretty positively.
Yeah, it's definitely people, again, they have an idea of what disability looks like in their minds. And the old myth of disability carriers, just to let you know, it's hard to get paid or whatever. That is definitely not true. It is a contract. It is a legal contract that if you fit the definition, and again, you get to go to your own physician. The insurance company is going to tell you have to go to a specific doctor. Obviously, if you have something like cancer, you have to go to an appropriate care doctor. You can't go to, a podiatrist for cancer. That's not really going to necessarily work there. But as long as you're having appropriate care and your doctor is saying, no, they cannot work, or they can only work part-time, the policy is going to pay unless we've excluded that specific area of your body or specific disorder that maybe from a history of it. But yeah, it definitely it's a just to give you an idea, the insurance companies expect about 50% of people who buy disability insurance to use their policies. So it definitely happens. And they, it definitely gets paid out there. Anybody else have any other questions or anything I can clarify or cover for you? Give it
I
a
think we
minute.
can probably go ahead and
Wrap
wrap it
everything.
up, guys. Yeah, Susan, I appreciate your time as always.
Yeah,
Lyndon,
thank you for
thank you
having
for
me.
helping. And yeah, if anybody here has any questions, we appreciate you coming and watching. And I think Lyndon said the recording will be available, so you're welcome to go back and watch that, or you can send me an email, or if I'm not your agent, even if I am, you can still send us an email anyway. We'll make sure it gets to where it needs to be. And yeah, thank you guys. And we'll talk to you later. Lyndon, unless you had anything else, or Susan.
No, thank you all for joining today. If you have any questions, just let us know.